Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, along with Dennis Dick, and we have Anne-Marie Baiynd on the line. She's an author and financial analyst, author of the book, The Trading Book Course, a practical guide to profiting with technical analysis. So, Anne-Marie, if we were looking in your book today for some cues to this market, what chapter should we go to?
Well, you know what? It's all about waves, how markets create waves, pull back, and move forward again. And we've been sitting, if we take, it's very hard if we stare at the markets every day to step back and say, hey, let's take a look at this weekly chart, see what's going on, see how we're holding the levels, what's happening. Now, we had this big punch up few weeks ago, and we thought for sure, hey, listen, that's going to move straight out. Last time I was on the show, I talked about it stalling out at 2104, 2105, and it came in there, sat for a bit, and then absolutely moved forward and has held and kept those levels over the last bit. But it's really pulled back. And so if we look at a weekly, we still see, especially if we're taking a look at the ES, we still see this channel formation. And there are a lot of folks piling into gold and silver and the miners saying, this is it, we're going to move. And for a short-term event, that is probably very, very likely. But if you have a longer-term cycle, that's a little bit early in my mind because we're still in the middle of this very wide, choppy region in the ES, which I love to look at because I do trade the futures. We've got this sideways action all the way down to maybe 2034, all the way back up to that 2134. And so we've got about 100 points of sideways activity, and we're still sitting right in the middle of it. So we should pull back into support.
All right, so that's. I mean, I tend to agree with you here. 2040 area. We were mentioning that before. We had multiple lows in the 2030 handle, but we had a major catalyst. We had everything going on with Greece. Now there's. I mean, we are in earnings season. Yo-yoing with the different earnings reports. Do you really think we're going to get back? I mean, you got to sit on your hands and wait till you get to there, or do you think that maybe the buy the dippers come in ahead of that major support?
Well, I do think that if buyers have been very good at coming in at those spaces, that we should expect them to be sitting there. And when they don't show up, then we'll see. Now, we run on different cycles, right? Some of us have intermediate holds, and then some of us have very short-term holds. I have both of those, and so to give me the bigger picture, to figure out what I'm doing right now, I can see if I'm looking big picture, I'm in a sideways space, I'm going to have a little patience. The charts that I really love, I'm just going to watch them pull back a little bit into deeper support structures and sort of time that with the broad market coming into that major 235 support level. If I'm doing intraday trading or short-term trading on a couple of days, I was writing in my blog for a couple of weeks that the last part of July is customarily quite bearish. And so we were here to anticipate that we would have a little bit of rollover into the end of the month. So I am seeing things from a little bit of a bearish pattern for the weeks. But what helps me manage risk, again, always managing the risk, I look at the bounces to fail, give me lower highs, and then I'll pick up those lower highs. It'll minimize my risk event in terms of the threshold, rather than taking the break of the low, because ultimately that only works if I'm in a trending environment. And this is definitely not trending. So taking those breakdowns or breakouts are usually very bad trades.
All right, so let's move on. We haven't talked to you since Apple reported last week. Big expectations, big run into it. Street, everyone had to be long. I got to be long going into Apple's earnings, and the street was not satisfied. So, a buddy of mine is still very bullish at looking, for one, you got to buy the 135, 140 calls, and I've just said, what will be the driver to take this thing back up? They just reported earnings, not. I mean, so far the reviews have been mixed on the watch here. Is it, finally time for us to get a good substantial correction in Apple?
Well, that's a tough one. That I think that my thought is Apple's in this gigantic trading range, and it's in a trading range from around and about 119 to 134. And I've been talking about this 134 to 135 peak.
Yep.
Golly, for months we've been chatting about this, right? And interestingly enough, as it comes into earnings, that's exactly where it plateaus. So my thought is, if it had fair earnings, right? The guidance was a little soft, and they didn't have what they wanted out of the iWatch, blah blah blah. The fact that it could not get up over that 135-ish area really told me, hey, listen, this chart is much more likely to dip into deeper support regions before it expands outside. And again, this is another one that's been in a trading range essentially since February. And so when something's in a trading range that long, you measure the height of the range, and then you watch it break out, divide that height in half, and that's the first target. So far, all we're doing is just sitting in the range, going from the bottom to the top, back to the bottom. And so let's watch for that break, and then there's the big move. Or you can simply trade the range because it is, 18 points wide or so.
Yeah,
points wide.
I'm really keeping a close eye. I don't know if you noticed that we hit in Apple going back, the low before the big move started, the head of earnings, I put a nice low in at 119.22. And then when they slammed it on Wednesday, they took it to 119.20. And then they got it back up. So, to me, if you're an Apple long, you're an Apple bull, you're holding out, you got to keep an eye on that level. I think you might see, as long as the holds there, I say, okay, yeah, we're still holding the trading range. But that 119.20 level is huge. So that's what I'm looking on. And I'm not buying it at 122 or 121 or 120. I haven't put on any shorts in it yet, but that 119 level really sticks out to me. So did you
completely?
Did you get down and dirty at Amazon at all on Friday?
Oh my goodness! I was wondering if you were going to ask me about that. No, actually, I was out of the office. I was working in the communities because it's one of my favorite things to do is reach out that way. And so I was away from my desk, and when I saw that fade, oh my goodness sakes, what a fade! But amazing that they bounced like that. Amazing.
I know.
What are you doing in there?
I finally did something in on Friday. I was watching this pre-market action, and when it opened up so high, I was like, man, I got to look at some of these puts. And the 550 puts were just ridiculously cheap, but I didn't do anything. And then I watched it go 560, 550, and then finally I said, man, I think this thing's going to close near the low of the day. And at the time, the 535 puts were really cheap. No one wanted them. And I just said, I got to get these things into money. And I did. And I covered it like 359, and then the last print they smoked it and they took another few dollars out of it. But everyone talks about how it was up 50 points. I talk about it being down 50 points. It was up in the pre-market. Yeah, so I don't know. Everyone got really carried away with the report. Actually, Barron's, I wish I would have wrote down the entire note, but the thing that everyone got so excited about was $192 million. And that was basically, or it was $156 million. That was the swing from it being in a loss to a profit. And on that, they added billions of dollars of market cap. So to me, it's just not justified. Dennis,
what were your thoughts on the move in Amazon? Like Anne-Marie, what are your thoughts here when a stock opens up 100 points and gives half of it back?
Well, that's a big tell. And for me, what I'll look for is The buyers that still have conviction, I'll watch them come in, and if they can't breach the major congestion level set out in the prior day, like I'm looking at that number being about 550. If they can't get up and hold 550, it ends up being another space to short. So this, I think it's a terrible thing if it pops up and then gives half of it back. But a 50% retrace is a really common number, and it's a place where people like to hang on to a chart, technically. And so if it holds this 530 area, chances are it'll get to 540 again, maybe even 545. And if it starts weakening right there, it's absolutely going to be another short. And essentially, we want a chart to fade its gap. It makes it stronger. If it comes in and fades the gap and then holds the level, it completes all that market auctioning, so there's not a vacuum there, right? It becomes a three-legged chair when it starts with this market auction vacuum where there's not a whole lot of volume sitting in the price point. And so when it fades and holds the level, if it comes back into that 493 area and it holds it, it's going to be a strong buy.
Yeah, go ahead, Dennis.
I was going to say, Anne-Marie, but did you notice also not only Amazon, but Google in the last 2 days has basically done the same thing, gapped up 100 points, was holding the gains for 4 days, and the last 2 days has given back over 50 points from the highs here. Now, this is a similar setup to the Amazon. Is it concerning that more than one stock did it?
Well, they've been really running super hot. And so
just profit taking.
From that space, yeah. So I think people get a little antsy. They're watching all the big markets drop, and they're taking a look at all their profit, and they're saying, I've just got to be prudent here and trim some of these gains off. At least that's what I'm thinking psychologically might be propelling that space. If it continues down, we've got other problems, but I don't really foresee it as being that. It feels like a little bit of a psychological event of, wow, I better capture these gains because I'm not really sure what's going on. The world feels really jittery this morning. The Shanghai markets obviously had a bad day, but then there's just a lot of fighting everywhere. And then the Brexit and it's just, things feel very fluxy. I know that's not a word, but that's how it feels. It does. It feels like something's up.
Okay. Any final words of advice here for our traders, going into this? I mean, you did mention, we're in a trading range, kind of in the middle of the range here. Any final words of advice for traders and investors?
Well, today we should expect to see buyers try to come in and hold the levels here in the broad markets. So if you've got longs or you've got things that I would be looking at things in really very short-term perspectives. Taking things and saying, hey, listen, this is my rotation for the next 3 months up or the next 2 months up. I think that's a little premature, and you've got to watch support levels, because if they get broken where buyers are supposed to be sitting, we're going to drift further south into deeper support. I see everything drifting down into deeper support. NQs have been the sharpest and the strongest, but they still are drifting. They should come into about 44.95, and then the TF coming into about, maybe 1,200, the ES coming into that 2035 that we've been yapping about, 2040. So I suspect that the best thing in the world for you is to stay frosty, as they say in the military. Just got to keep your eyes open and focus on support. If your chart loses support, it means buyers are not there to help you. And if you breach resistance, it means buyers are taking over on those spaces. And so you just got to watch it. I'm looking at things in very short cycles between support and resistance.
Sticking with support and resistance, Anne-Marie Baiynd. She's an author and financial analyst. She joins us every couple weeks to discuss her strategies for the market. Anne-Marie, great input as always. Thanks for joining us. We'll talk to you again soon.
Have a great day, gents and ladies.
Thanks, Anne-Marie.
All right.